All right, good morning, everyone. Let's get going. Okay, so last night's session, we finally had a snapback after 5 losing sessions in a row, which is the first time we've had that in over a year. We've got a winner yesterday, up over 1% on all the markets in the States. That's followed on nicely this morning by some of the Asian markets and more specifically S&P Future, which is up another 14 points at the moment. Really come out of the box hard today. I'm not 100% sure why. We've had oil yesterday, which dropped the 50 level in Brent at one point. We're back above that now, hovering at around 51 and a half on Brent, about 49 on light sweet. But we did sort of start to see a bit of a turnaround there in some of those stocks late in the session yesterday in the States. So maybe some of the guys may be starting to get a little bit more aggressive, picking bottoms. You got Halliburton and Exxon starting to rally, as well as some of the others. So we did have the ADP employment change yesterday for private employers. Came out better than expected yesterday. J.C. Penney also better in the holiday season. So we're seeing some strong numbers in Sainsbury in the UK, strong on the holiday seasonal numbers yesterday. So maybe some good numbers filtering through, from some of the retailers and some of the others, and possibly also some of these guys getting benefits out of a little bit lower oil prices, especially some of the retailers and stocks of that in those sectors. So maybe a new theme that we're going to have to watch out for in the coming weeks. All right, if you have a look at Asia, like I said, we rallied there. Shanghai down over 1%, but the rest of the market's up nicely. We did have some of the mining stocks which are still under pressure in Australia. BHP managed to gain a little bit, and I think that maybe it traded a little bit more like an oil stock yesterday. It also outperformed in London as well, but it's not a lot leading things at the moment. So, we did bounce hard yesterday. We are up a lot this morning on the S&P future, but the volatility's really picked up a lot. And I think it's important to remember, right now there's no, that I'm aware of in terms of for this bounce, there's not necessarily a significant catalyst there. So, these are the kind of rallies that, I mean, who knows what could happen here. This thing could extend itself even further today, or it could, these gains in the S&Ps could easily turn back into losses by this afternoon. So it's just the kind of thing where you got to really tread lightly in this market. Like we said, there's not really a real catalyst at the moment to continue to drive stocks either way. And, so I think that's a dangerous situation to be in, especially when we're in the type of volatility that we've been in recently. All right. Chart of interest today is from FactSet. We've got S&P 500 projected earnings growth, and you've got it there by sector breakdown of consumer, material, financials, technology, healthcare, all those kind of things. And you can see out to the right the energy sector, which is just absolutely, this is a forecast, right? So the September 30th, 2014 forecast, you can see how high it was for the energy sector and what it's looking like now. And that is just a radical turn. And as we said before, we're still looking at 15 to 20% of the junk bond market in these energy stocks. That's a huge risk. And I think if the oil price does continue to come down, it becomes a very realistic threat and as a potential destabilizer in global markets. All right. No core production to speak of today. In terms of the market data, we've got factory orders out of Germany at the open. We've got business confidence here locally at 11:30. At noon, we've got PPI retail sales and consumer confidence out of the Eurozone. We've got the Bank of England bank rate at 2. And then later in the States, we've got initial jobless claims and Bloomberg consumer comfort. All right, let's get into the maps. Sorry for you guys that joined us yesterday, not being able to show you the maps. We had wasn't our issue, it was a system-wide issue from Iris, who we're using for charting here. All right, first thing we'll have a look at, we'll start here on BGA. BGA, you can see up here, it's depending if you're a wick guy or a close guy, I think the close needs to be about above 183. If we set up for a potential breakout here that could really tack on, we could have a move up to 195 and potentially on a breakout there. It's built a lot. I mean, we've had probably close to half a dozen touches on this level, maybe even more. And so I think we get a close above 183. This thing can really go. A lot of the stocks in the banking sector is still looking pretty bullish. We've got Standard Bank here that's kind of been rip-roaring back and forth along this inverse head and shoulder. And you can see we finally really broken out, or we've gotten back above this level at about 141. Interesting because it really looked like we had consolidated there to make a breakout. We had that one huge fail day 3 days ago, which is possibly one of the biggest head fakes ever, and now we look to regain it. So I would say, we get back above this sort of level, maybe around 145. This thing that'll be a real clear signal that this thing can take out new highs and potentially on up close to the target up in the 160s. Okay, we'll look at ShopRite. I wanted to show this first on the 5-year. So we look at a 5-year here. There's a real shorten it up a little bit more. There's a real breakout that occurred in, I think it was November. Yeah, I think it was about November, on this big bull flag. So this is a 5-year chart here, and we're looking at a bull flag of a 5-year chart. Broke out and then failed it hard. And now we're right back above that level. If you bump it into a little bit shorter term, into it's too short. So we'll go into a year here, but we'll shorten it up a little bit. You can see here that we've really we finally made a break back above those levels. We've got a little bit of an inverse head and shoulder going on here. So we broke out of that, back above that resistance level on that big bull flag, that 5-year bull flag. And now we're taking out maybe a resistance on the inverse head and shoulder. Even if you look at this in a lateral, from a lateral point of view here, that we've closed to new closing highs here out of this formation, and I think that we've got a really nice higher target here. To me, this thing's set up to continue to move to the upside. And one of the things that I do like about this stock and maybe some of the others in the sector that may be starting to get a little bit of a benefit pretty soon is we also starting to see a little bit of pressure come off from that oil price. Fuel prices starting to come down a little bit more significantly. Now that might start to filter through to some of the retailers in a small way over the coming quarters. All right, let's look at Discovery. Discovery also coming up here to test the more recent highs. It's a bit wicky up here and kind of difficult to define an exact level. I'd put it up around 112. You could look at it, maybe as even less, or you could even just try to say that you just got to take out all-time highs. Either way, a close above 112 to me really gets this thing going for a breakout. For me, it's kind of a continuation move after the consolidation, after the breakout here of a 104, and we've consolidated. And this thing just, every time it breaks out, you just got to buy it. It's worked almost every time, and I think there's an upside target, maybe about $8 higher, put us up close to 120 in Discovery if it gets through there. And then the last one we'll look at this morning is Steinhoff. So if we just back it up just a touch, we know this one, we've looked at this several times, but above $60, 60 and maybe 60 and small change is where a breakout would occur. And if we get above those levels, and if it breaks through, there's a significantly higher target from that breakout. And that's it for today, guys. Thanks for tuning in.